There's been a lot of chatter about the real estate market crash in the Dallas-Fort Worth area, as well as across the U.S. Some people we're talking to clearly remember the pain of the Great Recession of 2008, and they're worried that we're going to see something similar or even worse in the near future. And we get it. We have definitely lived through it as well.
We had only been in real estate for 4 years before it seemed like the bottom fell out. Bret had recently quit his job as a full-time firefighter and paramedic. I had just been through the fight of my life, having been sick with mercury poisoning and not knowing if I would ever get better. Thankfully, after getting well, I got pregnant. And we weathered the storm by just getting really strict with our budget, shopping at thrift stores, living as cheaply as possible, and staying in our house until the market recovered. But thankfully, it didn't really last that long in the Dallas-Fort Worth area, only a few years. And we're going to give you some of the main issues that led to the Great Recession of 2008 and compare them to today. If there's one thing we've learned in the past 20 years of being in real estate, it's to look actually at the numbers, the data, and not just the headlines of the latest articles out there. Our mission is to give you factual information so that you can make the best decision for you and your family, whether that's to make a move or just stay right where you're at. So stay tuned until the end when we're going to share with you how to keep yourself protected if you do choose to buy a home this year.
The first and biggest factor that led to the Great Recession was the easy access to mortgages. The lending guidelines back in 2008 were almost non-existent. It was just a formality of filling out paperwork. The government and the banking industry made mortgage rules so relaxed, so much that you didn't have to prove that you even had a job to pay back the mortgage or loan. On top of that, you did not have to put any money down for the down payment. Plus, you could roll in all your closing costs in on top of the purchase price. So when a buyer closed on their home with zero money down and financing their closing costs in on top, they were already upside down on their new home. This put so many people at a great disadvantage. If they were to lose their job or steady income and needed to sell, they couldn't without having to bring money to the table. So many people ended up in a foreclosure or having to do a short sale. Now, it did work out for those who were able to stay in their home for several years, like us. We wanted to move, but we waited until the market came up enough to be able to sell and still make money to buy our next home. Actually, in the DFW market, it only took until 2011 for the majority of the housing market to recover with home prices at or above the 2008 values. Another thing banks were doing was allowing homeowners to pull money out of their home that they're living in and to live off of that, even though they didn't have a job. The government and the banks had decided that everyone should own a home, whether they could afford it or not. And it actually put people in harm's way. Today, mortgage guidelines are very different. You actually have to prove you have a job with an income that will cover the monthly mortgage payment. The underwriters definitely will cross their T's and dot their I's when making sure someone is to qualify to buy a home that they want. This has kept the housing market stronger and healthy.
Another factor that added to the Great Recession is something that Bret just touched on. In 2008, many people were upside down on their mortgage and they didn't have the equity or the money to sell when they needed to. In today's market, over 67% of Americans have paid off their mortgage or have at least 50% equity in their home. This is a much different situation. With home values increasing so much over the last several years, that means equity has increased as well for many people. And now most homeowners are able to sell and avoid foreclosure or short sale. Some headlines are showing that foreclosures are at an all-time high. But that's only since the pandemic. They're comparing it to historically low levels in 2020 and 2021 when there was a foreclosure moratorium. We're nowhere near the foreclosure activity of the Great Recession. Any homeowners that are in trouble with paying their mortgage are finding more alternatives today, keeping them from defaulting on their loan.
While the pandemic caused unemployment to jump up over a couple of years, the jobless rate has already recovered back to pre-pandemic levels. Things were very different during the Great Recession. A large number of people stayed unemployed for a much longer period of time, with the unemployment rate reaching as high as 10%. Because so many people are employed today, there's less risk of homeowners facing hardship or defaulting on their home loans. This helps put today's housing market in a stronger position and reduces the risk of more foreclosures coming onto the market, especially in the Dallas-Fort Worth area. The unemployment rate in the DFW area is currently around 3.2 to 3.3%, lower than the long-term average of 5.17%. This is also lower than the 3.7% currently nationwide, which is not bad either.
Supply and demand is also a big difference in the housing market for the Dallas-Fort Worth area today versus 2008. DFW has a strong economy, which is causing more people to move here. The GDP in 2022 was over $688 billion, ranking at number 5 on the list of top metros in the U.S. 24 Fortune 500 companies have headquarters in the Dallas area, and businesses continue to expand or relocate here as well. The DFW area is one of the fastest growing metropolitan areas in the U.S. We're helping people move here from all over the world. And to be honest, the majority of them are coming here to have more freedom and opportunities. But this also means that the demand for housing will continue. And we're still undersupplied with homes, which will cause home prices to continue rising, but at a steadier pace than the last few years.
I hope this information has helped you see how different things are now versus the Great Recession of 2008. If you're wanting to make a move, but want to make sure that you and your family are protected, here are a few things that we recommend. First, talk with a reputable mortgage lender to see what your options are and what it would actually cost you to buy a home you really want. I would caution you not to rely on Google searches for mortgage rates and calculators. They can be off drastically. What you can actually afford will be determined by many factors, including your credit score and where you're wanting to buy a home. So your dream home could be much more affordable than you think. And mortgage interest rates can be lowered. You can choose to buy them down or ask the seller or builder to buy them down. You have options. Secondly, unless you're doing a VA or USDA loan, put money down up front on your loan. And don't roll your closing costs in on top of your loan unless you're getting a house far less than what market value is. Third, I would highly recommend that you have money in savings to cover any potential downturns with your income, so you can still make the mortgage payments no matter what. And fourth, make sure your lender is accounting for unexempt property taxes. Some owners have gotten in trouble because their lender based their monthly payments on exempt taxes. So when the property value and taxes went up, they could no longer afford the home.
We hope this video has been helpful for you, and we'd love to know your thoughts. Just drop your comments below. And if you're looking to move to the Dallas-Fort Worth area, check out our next video on where to live in Dallas, the top 10 best Dallas suburbs.